Old school value stocks pushed up the Dow today, but the Nasdaq was down and so was the S&P 500. But technology stocks, especially semiconductors and memory chips, took a big hit. The Roundhill Memory ETF, DRAM, ticker symbol DRAM, dropped by nearly 9% today, along with other big names like Micron, Samsung, and SK Hynix. So today we're going to be taking a look at what's happening because we have to be ready to handle whatever the market throws at us. Asian companies like SK Hynix dropped by 9% also. Samsung was in the mix, falling significantly. And then that selling pressure spread across the US markets. Investors are worried about AI spending. Big tech companies are spending hundreds of billions on new equipment, but Wall Street wants to see clear profits. And there definitely is a future supply when it comes to getting those chips manufactured, especially in China. Are they overproducing when it comes to the chips, or are they really needed? Looking at the top holdings in DRAM, the Roundhill Memory ETF, we see those companies that had big gains of 100% to even 300% earlier this year. This fund is heavily weighted into Samsung, SK Hynix, Micron, as well as Western Digital and SanDisk. So with the moves that these companies have made, it's not uncommon to see a pullback. And of course, when those big players drop all at the same time, we're going to see an ETF like this heavily impact. So as of today, this ETF is in my portfolio. I had a limit order that was sitting for weeks filled. I took a moment to share throughout the communities that I'm a part of, like right here on my YouTube community wall, giving a reminder that if you've been looking for an entry to start your position or an opportunity to build upon what you already have, set your alerts, get those limit orders in, because we were definitely seeing that pullback today. But you have to always remember, do your research to make sure that what you're incorporating matches your risk tolerance and overall strategy on how to build your portfolio. We don't invest based on emotion. We have to do it by the technicals and fundamentals. Of course, seeing your investment going up like it did from early May being at $55 to June at nearly 81. But we have to be ready for volatility to go both ways. Prices can drop significantly and then bounce back. And the bottom here is the alert that I saw pop up on my phone when that order for 3 shares filled at $48.20. So that was my start to my position in this ETF. I'm glad I waited and set that limit order because just 1 month ago, when I was thinking about adding it to one of my portfolios over at Fidelity, I was slowed down by their 5% fee that they're charging for Roundhill ETFs because of a lack of an agreement between Fidelity and Roundhill, as well as other brokerage companies. At that time, the ETF was about $70. When it comes to my portfolio, an ETF like DRAM will always have a much smaller position than a foundational investment like VOO. I'm holding it for now without a stop loss. I'm going to allow it to have the chance to recover and grow, add additional shares to build up my position a bit, but also being mindful to make sure that in time, that performance worth it, commanding the high expense ratio that is associated with this fund. This is a chart just to give a quick reference as to how much it's going to cost you per 10,000 or 100,000 when you're holding certain investments. So VOO, for example, with that super low expense ratio of 0.03% would just be $3 per year on a $10,000 investment, while DRAM at 0.65% is $65 yearly on that same 10K investment. DRAM closed the day at $47.77, but you can see here in the overnight, it's up to $50.09. up 4.86%, leaving me with a 4% gain so far on those few shares. By having patience, I was able to get my position started below $50, bringing something new into my portfolio to pair with my foundational, more diversified ETF funds that definitely have that lower expense ratio. But the growth potential of this memory ETF is also something that I want exposure to see my portfolio growing and thriving. Let me know in the comments how you're balancing big tech like this along with your other ETFs, mutual funds, and individual stocks. My ETFs keep me diversified and having strong exposure to the top names. For example, I do not hold any shares of Micron in my portfolio, but now I'm getting exposure through DRAM as well as other ETFs in my portfolio like SMH, SPMO, and even VTF. So don't feel like you're missing out. Take it slow. Evaluate fund overlap. Make sure that you're creating the portfolio that truly is in line with your goals and not creating a portfolio with a ton of individual stocks and ETFs that aren't necessarily needed in order to have you on track for growth and exposure to the sectors and companies that fit into your long-term plan. So make sure to leave me some comments and let me know your thoughts on if there could be an oversupply when it comes to this area, if we'll bounce back from the profit taking and current concerns of investors when it comes to memory stocks. But as for me, it's a new investment to my portfolio. I'll definitely be holding and keeping an eye on future news updates related to those top companies. So I am Lisa J. Stocks. Thanks for checking out this quick stock market update. Take a second to subscribe, like, hype, and comment. Okay, bye.